Hey everyone, and welcome to this explainer. Today, we're diving into a topic that affects literally every single one of us. But let's be honest, it often feels like a completely foreign language. I'm talking about the American tax system. While combing through the source material, I found 10 strategic, absolutely legal tax hacks used right here in the US. So let's explore how we can translate this seemingly complex code into actionable steps to preserve your wealth. It's a simple question, right? But it's a powerful one. Are you paying more taxes than necessary? If you haven't scrutinized your pay stubs lately, the answer is probably yes. But here is the great news. You absolutely do not need a finance degree to keep more of your own money. The tax code is full of legal, straightforward ways to reduce your burden. In fact, as they go through these 10 hacks today, let's actually build a step-by-step checklist for your annual end-of-year review, just to make sure you aren't leaving any of your hard-earned money on the table. Okay, let's dive into this. Here is our roadmap to make this super manageable. We'll be covering maximizing retirement savings, the healthcare tax hacks, smart investment strategies, business and real estate, and finally, tax credits and deferrals. Starting off with Section 1, maximizing retirement savings, specifically looking at 401ks and Roth IRAs. Let's break down hack number 1, maxing out your 401k. Think about a typical household scenario. Say you're bringing in 80 grand a year. If you take 10,000 of that and funnel it straight into a traditional 401k, the government doesn't actually tax you on the full 80,000 you earned. Nope. Your contributions actively reduce your taxable income. So boom, your taxable income becomes exactly $70,000 just by moving money from your paycheck into your own retirement account. You've instantly shielded 10 grand from being taxed this year. So let's make that step 1 for our end-of-year review checklist. Always check those 401k contributions. Now, what's really interesting when we compare these tools is the contrast. That brings us to hack number 2, the Roth IRA. With the 401k we just talked about, you're getting a tax break today. But with a Roth IRA, you go ahead and pay taxes now on the money you earn. The magic, though, the magic happens later. You get to enjoy tax-free growth and completely tax-free withdrawals in retirement. It perfectly illustrates the two fundamental American retirement strategies. Do you want the tax break today, or do you want the tax break tomorrow? Honestly, having a mix of both is usually a phenomenal strategy. Moving right along to Section 2, the healthcare tax hacks, zeroing in on HSAs and FSAs. We all know healthcare is an inevitable cost, but how you pay for it makes all the difference in the world. And this brilliantly illustrates hack number 3, the health savings account, or HSA. This thing has what's known as the triple tax advantage. It's basically a financial superpower. First, the money you put in is tax deductible. Second, that money grows inside the account tax-free. And third, when you take the money out to pay for qualified medical expenses, those withdrawals, completely tax-free. Seriously, there is no other account in the American tax system that offers this triple threat level of protection. If your household has a high deductible health plan, verifying your HSA funding is absolutely step 2 for our checklist. Now, a close cousin to that is hack number 9, the flexible spending account, or FSA. If you don't qualify for an HSA, an FSA is another excellent, super straightforward way to handle those healthcare costs. You fund an FSA with pre-tax dollars straight from your paycheck. That means you're paying for things like prescriptions, copays, or even certain medical supplies before taxes ever even touch that money. It's a fantastic, immediate savings tool for everyday medical costs. All right, Section 3, smart investment strategies. We're talking about the power of time and strategic selling. For anyone new to this, the stock market can seem a bit intimidating, but the tax code actually rewards patience. Hack number 5 is simply holding your investments for over 1 year. Think about it. If you buy a stock and sell it a month later for a quick profit, the government slaps you with short-term capital gains taxes, which are usually the exact same high rate as your standard income tax. But just by waiting more than a single year to sell that asset, it magically converts to long-term capital gains, which are usually taxed at a significantly lower rate. Patience literally pays off here. Let's move to hack number 7 and see how this builds into something called tax loss harvesting. This is a real game changer and a vital addition to our annual review checklist. Step 1, sell losing investments. Look, nobody likes holding a losing stock, but you can actually use it to your advantage. Step 2 is offsetting gains. Let's say you sold a stock for a $2,000 profit, but you sell another stock for a $2,000 loss. Well, those two just canceled each other out in the eyes of the IRS. Step 3, this potentially reduces your overall taxes. By strategically selling a loser, you've created a tool to wipe out your taxable gains. It's a brilliant way to turn a portfolio negative into a massive tax positive. On to Section 4, business and real estate, which is all about rewarding entrepreneurship and ownership. The U.S. government heavily incentivizes starting your own business. This brings us to hack number 6. A typical household scenario might be someone doing some freelance graphic design or consulting on the weekends. By having a legitimate side business, owners can deduct everyday legitimate expenses. We're talking a portion of your internet bill, software subscriptions, buying a new laptop, or advertising costs. These are expenses you probably would have had anyway, right? But as a business owner, they lower your taxable business income. It's just a massive advantage. Another huge strategy, hack number 8, is investing in real estate. The tax code famously favors property ownership. You get depreciation, which lets you deduct the perceived wear and tear of the property over time, even if the property's value is actually skyrocketing. You also get mortgage interest deductions, meaning the interest you pay to the bank lowers your taxable income. And finally, you get property expense deductions for repairs and upkeep. If you own property, reviewing these expenses is a totally non-negotiable part of your end-of-year checklist. Finally, Section 5, Tax Credits and Deferrals. Let's look at the big picture. Hack number 4 is absolutely critical. Get every tax credit possible. Everyday people miss out on thousands of dollars simply by not claiming these. Now, unlike deductions that just lower your taxable income, a credit is a dollar-for-dollar reduction of the actual taxes you owe. It's so much better. If you have a family, you've got to look into the child tax credit. Paying for college, the American Opportunity Credit can be a huge help. And depending on your income level, the Earned Income Tax Credit can result in a massive refund check. Do not leave this money on the table. So the absolutely crucial point here, our final hack, number 10, is to delay taxes legally. The ultimate goal of so much of the U.S. tax code is allowing you to use retirement accounts and tax-advantaged investments to push taxes down the road. That way, you keep more of your money working for you right now through compounding interest. So let's quickly summarize that annual end-of-year checklist we've been building. First, review and max out your 401k or Roth contributions. Second, verify your HSA or FSA funding to shield those medical costs. Third, harvest your investment losses before December 31st. Fourth, tally up your side business and real estate expenses. And fifth, double-check that you qualify for those massive tax credits. We've covered a ton of ground today, translating what feels like a very complex system into actual actionable steps. The tax code is essentially just a giant roadmap of incentives created by the government. They are literally spelling out how they want you to manage your money. So I want to leave you with this final provocative question. Which of these legal tools are you going to use to keep your money working for you? Take control of your financial roadmap, apply these hacks, and keep more of what you earn. Thanks so much for joining me for this explainer, and hey, happy planning.